All right, good morning, guys. Welcome to the Wednesday webcast live stream. Still a working title. It's July 24th, 2019, middle of earnings season here. We've got hopefully a good show for you, guys. We've got Alex Koprivicia, my head crypto and FX guy who's been running the Bitcoin show, waiting on deck. I've got a special guest, Jon Najarian, coming in here at the top of the hour, so it'll be a good time. We'll get as much as we can in there before the bell with Jon, and obviously earnings season. We've got in the heart of the earnings season here, so good stuff. Futures down here a little bit before the open, right at 3,000 on the front month ES contract. NASDAQ hanging below the 8,000, down 0.5%. Crude's up a little bit here, so yeah, we'll have some kind of fun stuff here. Let me display number one. There we go. And let me just roll this in here. Also, let me just make sure get to the screen, guys. How we sound? Are we okay? Audio all right? Good morning. Good morning. Good morning. Everything looks okay. All right. So. Yeah, so we have some. Obviously, the earnings season is now underway. This is a heavy tech week here. We saw some disappointing Boeing and Caterpillar ahead of the open here. So let's just go in and take a look at the reactions there on those charts. So BA, that's not such a bad reaction. Boeing was $5 billion light on revenue. Caterpillar, that's no bueno, coming out of a 138, closed down to 131. We'll be watching Facebook, obviously, coming up. Facebook's acting quite strong here, but overall the earnings have been fairly solid. Some bad news coming out of the DOJ for antitrust follow-ups in Apple, Amazon, Google, mostly. You know, it's going to be hard for them to proceed forward, so probably not going to be a big market mover there. We continue to be somewhat bullish here. If you saw the free video last night, we were looking at a potential long setup in the NASDAQ, but we are still, and if members have been following along, we do still have downside protection in the S&P with some put butterflies. So I'm looking at both sides of the market. You know, the option side. We are going back and forth. We're trading a two-way market here, which is really kind of in line with our stock portfolio, our longer-term portfolio, which is 70% invested. We're trying to focus on high momentum, high beta stocks that are in kind of this stealth bull market as the mega cap tech fang just continues to kind of fight with the last 2 years range. So that's kind of the market we're playing. Long, really strong momentum stocks in the portfolio, but actually, and then also trading a two-way book down in the shorter term options market. So let's take a look at that. Comments, questions. Jay Wick says audio was mint. Awesome. Aren't you guys glad I got that big microphone, which is over there out of my face? Couldn't wait for that. So yeah, we're moving along here. The setup is progressing. We're not there yet, but we are closer than we've ever been. So let's hit some indexes here. There's a point of decision right here in the S&P. I actually got to get down to the intraday here. I'll take you through where we are very quickly. And then I'm going to bring Alex in, who's been doing some amazing thing in crypto and Bitcoin. So we're going to bring him in quickly before Jon steps in with us. And if you have questions and comments, hit him there on the YouTube window, and we'll definitely jump in there. I got a lot to pack in with Jon in a short period of time. So guys, from an Elliott point of view and a fib point of view on the intraday S&P index, here's the decision point today. From the July 15th high, you could argue that we do have 5 waves down. We've just done a big 3-wave move back up. Now, that's a big 3-wave move relative to what we saw just down here on the 15-minute. The one thing that keeps me interested in a possible ABC correction, which means it's a correction to a very new downtrend, is the fact that A is equal to C, so net percent distance traveled in A is equal to C at 3008. On top of that, if you do the 786 retracement of this little drop, it's also at 3008. So that's the line in the sand, guys. If you, sorry, and you guys yelled at me for hitting the table. I won't do that because it bumps this microphone over here. So if you break through there, it's going to be extremely challenging to hold on any kind of bear case. Okay, from there, the uptrend has been very choppy. It's been fairly difficult to read, but I certainly have no problem just respecting the trend here from the June lows and say we're going to continue higher towards 3,000. So we do have that kind of insurance trade on here in the SPX, and I'll show you that trade right now. So if you go over here, this is my cash account where I trade options. It's a put butterfly. It is a broken wing butterfly because we're centered at the 2,900 strike. We're trading 3,000. 22 days out. Obviously, it's a kind of a disaster insurance to get down to that 2,900 strike. I'm long 5, 15 points below it, and long 5, 25 points above the strike, above the body of the butterfly. And this is what I talked about last night, kind of combining your directional opinion based on the context that Elliottwave gives you with option setups like this. So being that we have 15 points below and 25 points above, it gives you this broken wing look. So the max risk that I have in this trade, this is a hedge to my portfolio. It's $1,000 of risk, okay, no problem, if we're 29, 26 and above. If we do get that 2,900 move, that's a potential profit of about 11,000 and change. And if we just get melted and crushed, that's a $4,000 gain. All right, so why would we get down to the 2,900? Again, based on that voodoo that we do, that you all love so much, that gets you down into the first fib retracement level, which is that 30% retracement of the June drop. So that puts you down into that zone right there. Okay, right there. Terry just threw a good question at me. Elliottwave question, is it good to practice the count movements during the extended trading hours? Great question. Yes, you really should be watching the S&P futures on a 24-hour Globex scale to do, the count. I'm just so in the habit of using SPX during the 6.5-hour trading session that, I should be looking at the futures overnight. There hasn't been a ton of movement overnight. We're starting to get some gaps, some 0.25% gaps here and there, which will change the outlook. But I should, and I probably will at some point in the future. Sorry, I should have a better answer than that. So from there, let's take a look at the NASDAQ. I did this in the free video last night. We're looking at a 5-wave move here and a possible triangle. If that S&P 3008 gets cooked, close the gap that is likely going to occur down in the next half hour before the open, I do think we begin to push on the upside. Apple is a trade that I recorded yesterday for CNBC. Let's take a look at that. I do see a little bit of strength coming out of Apple. We have earnings on the 30th, and we will be looking to, no Elliott wave on this guy, we'll be looking to press up and through this downtrend resistance. We do a live trading show for Schwab called Trading Nation, where I actually put live trades on. They get pushed out on CNBC. I have a live trading account with Schwab, and I put the trades on. Expected move for Apple into next week is up around $11, so we're at 208. So, you're looking for a break up around 220 in Apple. I also am going to be looking to do some call butterflies up around the 220 mark for earnings in Apple. Okay, so from there, guys, Facebook I think is also fairly interesting. Let's pull FB in here. A stock that has just been tortured in the news cycle, tons of bad news, is $20 off the all-time high. Amazing heading into earnings. So let's kind of price him out into the options market, with the options market for for earnings. So if we go over here to monitor, we go to all products on Facebook, you can see 84% implied volatility for earnings. We're looking for $12.38 at the plus and minus one expected move. That's the standard deviation off of a 202, puts you at 214 in Facebook. Primarily we're seeing pretty good response here into the earnings season, so I'm kind of inclined on Facebook to maybe go up and do something like, the expected move is 212, actually it's 214, so maybe around the 215 mark, maybe do something like this, buy a butterfly. We'll do, you could do $5 on either side if you want to do a balanced butterfly, 210, 215, 220. But if you want to give it a little bit of positive tilt, watch this. You can go analyze trade over into Facebook. That's a nice balanced butterfly. Costs you $56 on either side. If you hit the pin at 214, which is expected move, that's $442 a profit. You could give it a little bit of a bullish tilt if you want. You could drop that lower. So actually, let's do the upper call. If you drop that 220 call down, you're going to bring in more positive delta, which is going to give you more upside room. So 220 to 217 and a half. Now you still actually, now you have $94 of risk on the downside, max profit of 380, but if Facebook blows it out and does get, up towards those all-time highs, that's $156. Okay? So that's one trade that you could look to do in Facebook for earnings. We'll probably do that with our members. Okay, let's take a look at Boeing. Obviously going to be under pressure here. No surprise on Boeing. We've been under the belief here in Boeing that we are in a B wave. I did kick him out of the portfolio. It's not a good technical position anymore with all the bad news going on here. You certainly can make the case that that's a three-wave move in Boeing, and we're starting to play out here. Equality between C and A is at 399. The 61% of C versus A is at 378, so you got a zone right here. On top of that, you could make the case that we did have a five-wave move down here in Boeing. If you do a B-wave retracement compared to A, now you're starting to stack the zone in terms of resistance. So, if the overall market, guys, and we always use the index is kind of my guiding light. When I first started trading 20 years ago, I always learned to have the index behind your back. Trade strong stocks on the upside in an uptrending index and short weak stocks on the downside in a downtrending index. So, if, you can kind of tell I'm straddling the fence in the indexes here. If you do start to get a rollover in the broader markets, I think Boeing is something you really want to go after. Industrials are obviously going to be under pressure now with Caterpillar missing so poorly. So, we're starting to get this pattern starting to come in. And then downside in Boeing should be the area of the prior fourth. Okay, and that prior fourth is down at 293. I was talking about this one on Fast Money about 3-4 weeks ago, saying that, or maybe even a month ago, that we might be heading back down to this prior low. So watch out for Boeing. Watch out for Boeing, okay? Beyond Meat, don't know. John, good question on that one. I don't know. I mean, it's with a new issue like that, there's not a lot of historical, past evidence to suggest that, to give you an idea of where we are. It's just a pure new age momentum play that I don't know. Don't want to touch. Alex, let's bring Alex in. Let's get a quick Bitcoin update before John joins us. I'm going to bring Alex in here on number 3 position. Give me 1 sec here. I've got to scale him in, and Alex. Welcome to the show, sir. How are you?
Thank you, sir. Very nice. How are you today?
I'm good. Hey, you've been running the Bitcoin market like nobody's business. What are you doing? How are you? Oops, let's get that out of there. How are you doing it?
Yeah, you know that I'm a hidden whale, so I just teach for fun in your service because I like you. So.
Oh, you're cutting me a break. I appreciate that.
Just running the show behind and thing like I'm teaching. So, yeah, just a quick update on Bitcoin. I think we are still in this consolidation. We had a nice trade a few days back, really cool stuff. We saw here a potential five-way move up. We entered here, we exited right almost at the highs. We also, on the other side, tried to put another longs here, and overnight we had a small stop, so we have been stopped out, but overall around 14% in plus. So I'm kind of stepping away now, just still looking what's going on here. I think we are in a big X wave here. For my taste, this is too short for a wave 2. So I think we're going to do a little bit more, a few weeks of consolidation in Bitcoin before we start to do more upside.
Very nice, very nice. Yeah, you've been doing extremely well trading the crypto markets. Very well done. So we're out of the market. Yeah. Are you thinking about any kind of shorts, or do you want to kind of hold on before you enter on the long side?
No, I would like to look for a small longs here, but I need a confirmation, and then over there I will look for a failure around this wave B when potentially this markets roll over to another second part of a corrective pullback, and I would like to short it. Of course, on a confirmation basis, I always try to look for a nice risk-reward ratios, so our stops are rather say extremely small. I just wanted to add to this, you remarked several times that the crypto market is beautifully following Elliottwave, and that's exactly the truth. I'm loving it because the patterns are so clear, and I mean, you can kind of have a very good orientation if your proficiency is let's say rather good.
Very good, very good. Well put. Thanks, Alex. Great work in Bitcoin. You are calling turning points and putting on trades, and I'm not seeing anyone else on the internet doing so. Well done, or TV for that matter. Well done, sir.
Thank you. I had a good teacher. I had a good teacher that is Todd Gordon, the man.
All right. I'll increase your paycheck later. Thanks, buddy. Good work. Let's bring the man, the myth, the legend, Dr. Jon Najarian. Welcome to the show, sir. How are you?
Hey, Todd. Hello, everybody. Great to be here. Just sitting around in the green room, Todd, where you usually are sitting as you're getting ready to get in makeup. For,
I recognize that. Yeah. Did you get your workout in this morning?
Oh, yeah. Yep. Got my workout in there where, they're having some coffee over there.
Beautiful. Yeah. Beautiful.
I've got to, otherwise I'd beat my dog if I didn't get the workout in.
I mean, it's amazing how much clearer, how much more patient, and just how much more efficiently the brain operates with exercise, which can't be replaced with caffeine. I love your caffeine post, but I know oxygen to the brain is worth much more than caffeine to the brain, right?
Well, that's right, but but never undersell caffeine.
It's that perfect combination. That's awesome.
Yeah, it's the thing that makes me go from wanting to kill to calming down. Some people, it puts them on edge, Todd, as you know. For me, it calms me down.
That's funny. It's like there's so many ways I could take this conversation, but anyways, you guys.
We were both together in Chicago this weekend, so that was cool to see you in Chicago.
Yeah, it's been awesome.
Nice presentation.
Oh,
Todd set the table for me, folks. If you didn't see it online or in person, Todd did a great job because it was the Traders Expo, I guess, but. If you have a dud as a speaker before you, it doesn't really work so great. It takes you 10 minutes to get them up. You know what I mean? But Todd had them rolling.
Well, I mean, it's funny. It started with before me was Tom Lee, and of course, try to compete with him on an intellectual level. I mean, I'm losing before I get up on stage, and then to loosen him up and try to say, hey, trading can be fun and not so thick. I try to loosen him up, and especially if you precede Jon Najarian, you better bring the energy. So it was fun, and I got to spend some really good time with John in Breckenridge at the All-Star Charts at the Chart Summit, which was great. And I don't have a lot of time. I could speak to Jon and ask him so many questions, but you guys know Jon, former NFL, he's a floor trader, he's an entrepreneur, he started multiple businesses which have been taken off of his hands very willingly. This is one of my first questions, energy and drive. I think we already inadvertently answered that question. Obviously you got to love the game, Jon, but where do you get, and I was almost a professional skier. I mean, I was competed at Division I level, man. Him and I were going at each other all day. He's got energy he's all over the world. He travels, he must be in an airplane every day, man. Where do you get this drive? Where does it come from?
Just like you, Todd, and probably like a lot of you guys that are watching this, I'm blessed to not only live here in this country, but I'm blessed that there's so many opportunities before me every day. Some of us don't have the chance to go away from whatever they're doing and seize one of those opportunities. I've been, like I say, blessed to be able to say, well, I think we should create a brokerage, or I think we should create this online media company, or I think Pete and I should write a screenplay. Because of some of the success that we've had. We've got one coming out, by the way.
Do you really?
It's not, yep, and it's not just about trading, but it's about idiot savants and how, it's almost Rain Man for trading, I'll tell you that. And we had it all set. It was almost it was in the hands of producers who said, we're shooting this, we're doing this, and I can't say which actor, but one of the actors had a really bad incident with a woman, and all of a sudden the thing got put on hold, and that was 2 years ago or 3 years ago. So it'll come, but I'm rewriting it now to make it more, more timely than it was when it was written 5 years ago.
Oh my goodness! Oh my goodness! And then obviously,
it'll be cool.
Steven Seagal would play you, right? And
that's what I thought. Yeah, but I'm actually not even in it. I'm not in it.
Okay.
It's not about Jon. It's not about Pete.
Right.
It's not about Jim Cramer or Todd Gordon. It's about Pit Trader and a kid that he meets that is this idiot savant with numbers, and so I think you'll really like it.
That's awesome.
When it finally comes.
That's awesome. I didn't know about that. I can't wait to see that. So, hey, you're at CNBC right now, and this is a question. I'm not a good interviewer. These are questions I generally want to know. I maybe not asking questions so much for the audience. When you go on CNBC and you have, obviously, you are a technical trader. You're a floor trader. You read the tape. You know the crowd. But how do you take what you do in terms of fundamentals and convert that in terms of the fundamental news flow? How do you convert that into trading opportunities when you go and you look at your unusual options activity, which I want to ask you about next? But because, a two-part question, when you do put trades on that perhaps you speak about on CNBC, time frame, and two, how do you take the fundamental news flow and convert that into opportunity?
I guess it's just because we've done it for so long, Todd. I mean, the same things that your setups. I mean, we have setups in that unusual option algorithm that we do. We call it Heat Seeker.
Yep.
We've actually got trademarks and patents on it. But what we do is we go out and we see this flow coming in. We know we're not the only ones in the world that are looking for this. But it's really critical these days because trading is so fast, and there are 17 option exchanges, and there are dark pools as well where people throw in iceberg orders, where you're only seeing the tip of it, and there's really a whole lot beneath the surface and so forth. We're looking for that unusual buyer of a call or a put, and as it's building and as it overcomes the open interest and things like that, that's really the driver for us. And then, a lot of it is just like, Snap. Snap had unusual activity multiple times, basically since March. Luckily, it had some in June and July, and they were all pointing towards this July 26th expiration, which, of course, is 2 days from now. And Snap has kept rising and, made it to 14-something, and then boom. With the earnings, it explodes to 1650 or 1660, where I sold a slug in the pre-market. And, you know, when you've got a catalyst like that, I mean, I know you do the same thing, Todd, but for the viewers to hear how my process works, I listen to guys like Todd. Todd is one of the guys as far as what I care about, as far as technicals and so forth. There are other people that send me stuff, but I always, you know, pay attention to, wow, we might have a pivot at this level, or we might have a breakout if we get above here, or a breakdown if we go below here. So I listen to that stuff, and then I put it together, of course, with, I don't know if it's fundamental, Todd, but
Sure.
like with earnings reports, I'm looking for, okay, for instance, Todd Gordon says we're breaking out if we go above this level, and they're buying calls above that level. Well, so that tells me that somebody's out there bullish on a call that expires in 2 days or 3 days yesterday.
Right.
And I want to play that. And by playing it, I mean, I put my money on the table and I try to cut my risk as much as possible. But the nice thing is with options, for every day when I have a Netflix where I just stunk, because I mean,
Yeah.
I lost a Prius or something. I lost like $18,000 or $19,000 on that trade, Todd. Never happy about it, but it was basically a binary bet in Netflix last week. I owned the, I think, 380s and sold the 390s. So that's a call spread. I control the amount of risk, but it vaporized. You know, so in full disclosure to all of you, not every trade works. Sometimes people that are buying a lot of something are wrong. Most of the time they're right, though. And so Todd and I are like card counters. We just use different systems. I'm using a system where I'm counting the twos, threes, fours, and fives, and Todd's using one where he's counting the face cards. I mean, you know, both systems work in blackjack, and you don't need your toes and your fingers to be able to do that. But, you know, I'm looking for unusual buying activity from somebody who has a lot more money than I do, who is attending all these conferences and all the rest. So with that said, that's why I think it's relatively easy for me to bring across on television what I do, because most of the stuff that's trading are household names like Snap, like Apple, like Facebook, like Google, whatever. Although Google's almost never on there because it's too expensive.
Too expensive. So based on that, well, and let me just remind people from a trading point of view, John said he lost a Prius, right? But what I teach and show and practice every day, because like you, I trade live capital every single day, publicly and privately, it's all based on percent. John goes into a call debit spread, buying the 340s, selling the 350s. He knows how much that $10 spread is going to cost, and that goes into the calculation way ahead of time. John went into that trade fully prepared to take that risk. It's all proportionate. Okay, that percent that John had at risk is something he's certainly comfortable with. And if you're only trading a $10,000 or $20,000 account, know what those percents are. So, John, on the unusual options activity within the heat seeker methodology, how far out on average would you say are you trading? When you see that unusual activity, is it mostly near dated, or is it kind of further out?
Most of it's near dated. Most of it, I'd say, Todd, is 1 to 2 months out. Doesn't mean I'll hold it for that full length of time, but it's 1 to 2 months out. That's just because, as you know, it's like 55% or more of options volume are actually in either weeklies or the monthly options. Because, you know, people like having time decay be their enemy, but having a defined risk, meaning that it's going to react very quickly to some positive or negative news, because people buy puts occasionally. And by the way, Todd, just to put it out there, when I did that Netflix trade, so I had a controlled amount of risk, and I always preach that to people, but I don't pull the trigger for you guys. You have to pull the trigger.
Right.
But some people have made an awful lot of money following our stuff and selling out of the money puts. They go, oh, John's seeing unusual upside. I hate to buy, so I'm going to sell some out of the money puts. Those people are both brave and stupid in some cases. Not all cases. I know some of our subscribers are probably watching your stuff saying, John just called me stupid. They make a hell of a lot of money when they do that, because, you know, I don't know what the $20 out of the money Netflix puts were going for, Todd, but if you sold those, you were in a world of hurt,
Right.
Because I had a defined amount of risk.
Right.
Somebody that sold a $10 or a $20 out of the money Netflix put never thought that put would go from 75 cents or a buck to $20, but it did. And that's $20 out of your pocket.
Out of your pocket.
That's a
if they
world of hurt.
But again, if it's trading with a plan, if you want to get the stock anyways and you want to accumulate lower, that's a different strategy because the time frame and the horizon is different. If you're selling $20 out of the money puts, fine, and you get put the stock, okay, right? But to your point, but you're trying to play its time frame. It's a matter of time frame and time horizon, which you might be in the trade for just post earnings a couple days after, right? So that's a conflict you don't want to get in the way of.
True. And everybody thinks, just like Mike Tyson always said, everybody has a plan until they get hit in the face. Everybody has a plan, Todd, until they sell that out of the money put that goes from a buck to $20, and they're buying it back at 20, going, or they're taking the stock. And if you're taking the stock, guess what happened? You just turned. If you sold a 10 lot. That's with Netflix, where it was, let's say, at 320 right after earnings, 324, wherever it fell to. Right. A 10 lot is a big trade because 1,000 shares is 10 lot of options. So that's $320,000 just got tied up of your money. So if you don't have 320, your broker's knocking on the door or your broker's texting you saying, I am liquidating your sorry butt. If you don't send me a big wire now,
or send me some Bitcoin on the blockchain quick. So
send me 20 BTC.
So going back to seeing you 2 days ago in Chicago, you and I were speaking, and then Sosnoff was up next. Let me see if I could put you in a position. Two heavy hitters out of Chicago. Tom is of the belief that most retail in general should be going for the theta positive trades, should be using the option, the decay of option properties to make that money, selling expensive options, where I would say you and I on the other side are saying, well, look, if you have an understanding of what's going on in the news cycle and a technical understanding or context of where we are in a trend of correction, don't be so afraid of buying options, specifically when you have unusual options activity in the heat seeker where you might get a directional move. Can you kind of talk about this in options, the underlying constant is options that are exploding in popularity. Can you talk about this school of thought about selling options to gain theta or using the leverage of options to take advantage of short-term gains and leverage up?
Sure. And Tommy and I are friends, just as I'm sure you are with him. He's a smart guy. You don't get to be in our business we basically both started in 1981, before Todd Gordon was born.
No, I'm 79, Dr. J. I'm 79.
Oh, all right. Todd was 2 years old when I started on the floor. And so was Tom Sosnoff in 1981. I didn't know that for sure, but we both discussed it on Sunday. Did
you know he went to school about 20 minutes from here? I'm up in Saratoga Springs, New York. He's an Albany guy, so right down the road.
I know that.
Yep.
I do know that he is a great golfer and plays barefoot like I play. So I like that. but except he's a much better golfer. But to answer your question, Todd, for instance, Tom Sosnoff would almost never have sold that Netflix. For instance, the stock closed, let's say, at 365-ish on Wednesday ahead of earnings. He would have never sold a 345 put naked, but he might have positive theta, like you say, Todd, because he does an awful lot of iron condors and all that kind of trade. So that means he's selling a call spread, an out-of-the-money call spread, and an out-of-the-money put spread. Okay? So every once in a while you get tagged. I'm not saying Tommy was in this trade, so please, no hate, folks, again. But if you followed his kind of methodology, he would have likely been in a trade like that if Netflix met his criteria. So this would have been one of the times he got tagged on that trade. But what did he do? He had a defined amount of risk the same way I did, because he sold a call spread, for instance, in this example only, folks. He sold a call spread. Let's say he collected for a $5 call spread, let's say. He sold the, 385 calls and bought the 390 calls as protection. So he collected, let's say, about $1 for that or something like that. Then he might have sold the 345 puts, $20 out of the money, and bought the 340 puts underneath that. Again, defined amount of risk. Let's say he also collected $1.
Right.
In that example, he would have collected $2 for a spread that can only go to 5. The worst case scenario is it goes to $5. He collects 2 for it. Most days, most earnings cycles, he's going to bank most of that. And that's his positive theta trade, for instance.
Gotcha.
On that particular day, he would have lost $3. Is that the end of the world? No. It would be the end of the world if you sold those 345s and you're getting put stock at 325. You know, that's a pretty ugly day for any of us. But again, that's not what Tommy does. He's almost always got a put under the put that he sells, and he's got a call above the call that he sells. So he's protecting himself, and that's another way you move odds into your favor.
Gotcha. Thanks for that insight. How about in terms of your shorter term trading with unusual options activity at Invested2 in the Heat Seeker and longer term? How does your portfolio mix, look like? Are you primarily trading options in the short term, and then are you holding stock in your longer term portfolios? Are you doing kind of covered rights in the longer term portfolio? Or do you differentiate between longer term and shorter term accounts? Like, what does that look like?
I'd say I probably have about 10% of the portfolio is in stocks, and most of that's Apple. The rest of it is all in options or option spreads. And that's because, you know, what I do, Todd, is I have a chunk of money that I give to our wealth management team, and they just manage it. They're not flipping option trades all day, every day like I am.
Right.
They're just, you know, doing the same thing that, you know, a good broker anywhere would do for somebody that said, I'm already okay, just don't make me poor. Whether you want to say you're rich or whatever, I'm okay. Here's a slug of money, manage it, give me a superior rate of return to just owning the spider, and I'll stick with you. So I have my money spread around with some people like that. The money that I trade myself, I've got, like, on the high end, I might be as much as 20% of that portfolio. It's a 7-figure portfolio, but I might be as much as 20% in stocks. Most of it is in options.
Wow.
So like I say, between 10 and 20% in stocks. And if I am in a stock, Todd, I am overwriting it with calls like crazy. I mean, quick example. So I've owned Apple for a long time, luckily. My brother Pete's owned it for far longer. He's owned it since it was in the 20s. And I just write calls against it every single month. And every once in a while, I buy them back at a loss. In other words, I sell an out-of-the-money call because I say, you know what, I'm collecting, let's say, $2.50, $3 for a 5% out-of-the-money call or a 3% out-of-the-money call, whatever it is. I'm saying it's unlikely that Apple holds and sustains more than X as a move to the upside. And meanwhile, it's just cash flow in, cash flow in, cash flow in. Every once in a while, and lately that's been the case, the last 2 cycles, the last 2 months that is, I've bought back the calls either at break even or a loss. Okay. So if I sold it, for instance, same example, at $3, I'm buying them back at $5. But then I'm putting out the next month out at a higher strike, and I just match those losses that I took on that example, $2, against the gains that I've taken all year long. When you look at that, a stock like Apple, you can easily, with that kind of strategy, throw another 10 or 11% on top of what you make in Apple. That's awesome. It's just silly. And they've got a great dividend. Meanwhile, you know, if you say, well, Apple's a $200 stock, 10 or 11% is like $20-ish against, you know, so obviously I'm okay down to about 180 if it were to pull back and fall to a level like that. And I'm long-term capital gains. I don't plan on selling Apple, but if I did, I'd probably buy a put and push it out into next year, Todd, so I wouldn't owe the taxes on it till 2021. Because if you don't take it off till 2020, you don't owe taxes on it till 2021.
Right, absolutely. No, that makes sense. That's interesting. On you'll never let the stock go unless you get called away, which won't happen. But if you're at the covered call is at a loss, you just take it off, roll it out. You keep the underlying stock. You lost money if you're short the call, but the underlying must have gone up, right? If the short call is moving against you.
Exactly right.
That's interesting. That's really good. So interesting. And then, is there anything you're watching? I know we have Facebook coming up. Is there any trades, any setups that our viewers should be watching here over the next day or two? Because we're in the heart of tech earnings season now.
By the way, Ben Mezerek's new book, Bitcoin Billionaires. Oh, fantastic book. Fantastic.
I'm so happy you said that. I haven't picked up the book. Any day I have a Ben Mezrich book, I read it in about 3 days. Unbelievable. Oh, yeah. I love his writing.
Yeah. I tell you what, though, he makes Mark Zuckerberg sound like the biggest asshole. I mean, Zuckerberg, in the social network, he came off kind of as the, smart guy that kind of screwed these dumb hick jocks or whatever. In this one, he writes a much more balanced view of those guys versus Zuckerberg, and the stuff he writes about Zuckerberg, oh my God. So don't like the man, Zuckerberg, that is. Yeah. Love what I've read about Cameron and Tyler Winklevoss in the book. And it's basically about how they fought him to get a stake of the company that they created. That he just basically flipped on them. And while they were doing the Connect University or Connect U or whatever they called it, at Harvard, he basically took all of their stuff and created the Facebook. But anyway, so the reason I bring that up is Facebook is a fabulous stock. They print money, like Senator Blumenthal said the other day, Todd. Giving them a $5 billion fine is like,
slap on the wrist.
A slap on the wrist. Yeah, it really is, because $50 billion is what their revenue is going to look like. I've seen a lot of big upside call buying, $20 out of the money upside call buying. Could it go there? Could it go to 227? Sure.
Absolutely.
I'm still long call spreads in here. I've kept rolling them up. Okay. But I'm still long call spreads in Facebook.
Got it. I mean, just the abuse that Facebook deservedly shows taken in the news cycle, and you have a stock that's $22 off the all-time high. That speaks volumes. That's amazing. Good information there. This is Jon Najarian. I don't know if you can see our screen or not. We're just throwing some charts up. I can. Okay, cool.
Oh, there we go.
That is, you guys know, obviously, no closing needed, but he is at Investitute.com. I've been working with Jon on air. It's coming up on 10 years, if I can believe it. It's amazing, and Jon has been kind enough to invite me to his Las Vegas trading conference, October 4th and 5th. Some heavy-hitting names. Normally, I spend about a week or two before prepping my presentation. For the speaker lineup here, I am already starting. So, talk about some of the speakers that we have coming up at the event, Jon.
Sure. Well, like Todd's showing you there, folks, and thank you, Todd. It's October 4th and 5th in Las Vegas. We're even going to do a crypto dinner the night before, Todd.
Oh, nice.
As a separate thing, just for folks that really want to crypto focus. We've got some crypto whales, including, I got a call out of the blue last night, Todd. You'd love this, from one of Novogratz's guys.
Oh,
he said, hey, we want to come out. Can we come out and do that? And I said, you're my invited guests if you guys want to come. I love Novogratz. I think he's a very smart dude and fabulous speaker. I've heard him speak many times. We've already sold out the platinum packages, folks. That's not just a thing I'm throwing out there. I'm saying the $5,000 ones sold out like that. We're going to have a great room in Caesar's Palace. We're going to fill it. So whether you do it now or you wait until we're sold out, we're going to fill it. We're going to fill it because of guys like Todd, because people want to hear from Todd, because of Chris Irons.
Yeah.
Scaramucci.
Thanks, but let's focus on what's on the screen here.
Well, Peter Schiff. Tell me we're not going to have a great fight between Peter and people on the panel when we do that. Jeff Mackey, Kevin O'Leary, Adam Mesh. These are fabulous speakers, folks, that so you're listening to Todd and you're watching on his stream today. You're doing that because you want to up your game. You want to up your game when we've got this many speakers. I mean, Anthony Scaramucci has helped make people billions of dollars. Anthony's Skybridge conference, which I've been lucky enough to speak at, is one of the premier hedge fund conferences in the world. He built Skybridge from this to 14 billion. Then he went in with the administration and got kicked out 10 days later. But he also had the Skybridge get shut down as far as its sale to the Chinese. He built it back up because it had fallen, I guess, to about 6 billion in assets. He's built it back up over 10 billion already, folks.
Wow.
So this guy, if you want to manage money, this would be a guy to listen to. His war stories, not just political stuff, but war stories about trading and all the rest. He's been at Goldman. You know, he's a lawyer. He went to law school at Harvard with Obama. You know, fabulous stories. Jeff Mackey, his dad was the CEO of Target. You know, so Dayton Hudson, and then when they flipped the name to Target, Jeff's dad was that guy. And Jeff knows retail better than anyone. I defy anyone to know retail the way Jeff Mackey knows retail. Chris Irons, entertaining as hell, loves to short stuff, and we figured we should have something like that. We've got Traders Underground, Todd. Nate Show said he's going to come out as well. Peter Schiff, most of you guys know from seeing him on CNBC and MSNBC, Fox. You know, he is a combative dude about gold and why that's what you want to own. Forget about stocks.
5,000 gold. Buy them.
But it's not just, I mean, when you're there, you're going to be able to network with a lot of people. You're going to be able to hear about trading strategies from me, from Pete, from Todd, from Nate. You're going to get fabulous insights into a lot of the ETF world where Kevin O'Leary lives, because Kevin's got O-shares. I think you guys know that, which are his ETFs, where he's like big dividend payer ETFs and things like that. So anyway, I don't think you could find a conference that's going to have this kind of lineup for 2 days that's going to be as fun and as entertaining from a standpoint of, my God, these are people you see on TV every day, smart people that are going to give you real insights, you know, just like Todd is on these broadcasts.
Oh, that's awesome. It's exciting. I'm super excited to be a part of it. What an impressive event, guys. Get on it. We're going to have, obviously, Jon and Pete at the helm. It's going to be a very enlightening, talent-soaked event. Investitude.com. Folks, that's Jon Najarian. You know him. You know, how about a couple thumbs up on this YouTube video? Share this link. Get the word out. Jon, thanks so much. What is your schedule today? The halftime, and then what else is going on today at CNBC?
Let's see. You know, we've got that Mueller testimony. I think we'll still have a show, but I know they'll be cutting back and forth. You know, if there's something interesting breaking. But that's one of the good and bad things about being live TV, as you know, Todd. Yeah. All of a sudden, Apple has earnings and Todd's at the video board, and something happens at the conference, they got to cut away. So the same will be true for us, but we've got my brother Pete, me on the show today, along with, of course, Scott, who's back, Scott Wapner, the host. And it should be a great show. It's noon Eastern time till 1. Please tune in.
Yeah, that's it's funny. My first CNBC appearance, Jon, I was bumped for for Obama's first speech. I was already like, here's my big shot on CNBC. Like, sorry, the president's going to give his I
got a worse one for you, Todd.
What?
I got a worse one for you. For 10 years, I was on Fox, and I used to do remotes from Chicago all the time for them. Then one time they said, come on out to New York. We really want to do a full half hour with you. Neil Cavuto was all fired up and everything. I get out there, the Pope dies.
Oh, no.
The Pope dies.
No.
And that killed everything on the network for 3 or 4 days. But then they brought me out, and I did that again later. But that's in other words, you and I both have pretty impressive people that had caused us to go off.
We're gonna end this YouTube show on a down note. This is a true story. I was in EC right where you are, and I'm ready to go on. And all of a sudden, I see Mark Hoffman and his team solemnly but deliberately walking through they had just found out about Mark Haynes.
Oh.
And I was literally 10 seconds away from going on, and they say, Todd, you're cut, we're done. And all of Englewood Cliffs just got, I'll never forget that. But anyways.
What a nice man. I mean, he was, like a bitter pill a lot of times, Todd, but that was his shtick. I'm the angry guy. He's almost like the guy in Network, right? But he was also very nice, and that's why he was so beloved by everybody.
That's true. That's true. Hey, Jon, thanks so much for the time, and thanks for all your support. Todd. You have been huge for me on CNBC and always supporting me as I've come up. So thank you very much. Thanks for being here, and I can't wait to see you. Todd. I can't wait to see you and the guys in Vegas.
I'm looking forward to it. Be well, Todd. Thank you.
Okay. Have a great day. See you, Jon.
See ya.
All right, guys, that is Jon Najarian. Just a great, great call there. Hopefully you enjoyed that. And again, sorry I'm not up on the questions. That technology is not quite there yet, but we will get there. Let me just see as I'm able to monitor 17 windows. Trading, looking at charting platform and the trading platform, the charts in the trading platform. That's easy running a show like this. I think we need a Joe the intern. You need to be right here next to me next week. Joe the intern, come here. Get up here. Next week, Joe the intern is going to be running this show. I think he's ready.
I'm ready.
You're ready. There's a lot to manage back here. He's done a great job getting the show. Let's get a thumbs up and a comment on this. The production quality has definitely gone up, and he's been instrumental in it. So thanks, dude.
No problem. Thank you.
I'm trying to get him to quit and not go back to his senior year in college. I think he's kind of listening to me, but I wouldn't let him do that. Just stay here and work with us.
Next year. I'll be back.
All right. Sounds good. All right, guys, we're going to leave it there. Hopefully you enjoyed that. We will, let's see, members. We have a member webinar in 20 minutes. We'll check the open. Guys, have a great rest of the trading day. Hopefully you enjoyed it, and we'll see you next week. Guest to be announced. See you guys.